Good morning and welcome to this weekly market update from AGM Markets. Today is the 3rd of July 2012. What we're going to be doing today is going through some technical analysis on Euro dollar, cable, dollar Swiss, Aussie dollar and gold. Just trying to give some sort of market outlook for the next few days, for the rest of the week. We're not making any trade calls or recommendations. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. For any new followers, we have 3 moving averages on each of these charts. The red one is a 55 simple, the purple is 100 simple, and the gold is a 200 simple moving average. Okay, let's have a little look at the euro dollar chart. Let's quickly just flip it to the weekly. You can see last week's candle was quite a nice reversal candle actually. So in terms of just a brief look at the weekly, we won't look at any setups or anything because it is quite long term, but just in terms of the candlestick patterns, last week's candle was a nice bullish candle. Some people say it's a reversal candle. It's not quite a hammer though, because not enough lower wick for me, but there was plenty of low wick on that candle, and it's a nice green bullish candle. So in terms of just purely looking at the candlestick patterns on that weekly chart, and they are you've got to realise the longer time frame the chart, the stronger the candles are. So that last week's weekly candle, I would not be surprised if this week was another bullish week. Okay, let's have a look at the daily. We're still quite a way away from the 55 simple moving average, but it seems like it's wanting to come up and test it. But it has failed sort of the last couple of times. You can see Friday's candle there, a huge bullish engulfing candle. We didn't get above these recent highs there, but it was a very bullish candle, so that's another sort of reason why it could be bullish. We're doing this recording today on Tuesday. Yesterday's daily candle was quite bearish, but not engulfing, so maybe just a slight retracement candle, but nothing stopping it selling off. Some people say that kind of double top is forming here with lower highs as well, but then again you could say that we're also on a double bottom here as well with higher lows. So interesting and very tricky market on euro dollar to pick a sort of weekly bias for the week. That's why it's good to look at all these time frames when trying to pick a bias for the week and see, and you can basically just go and down towards the charts. You can look at the weekly, daily, 4 hour, blah blah blah, and then pick your bias that way to look at all the time frames to give you a good sort of picture. Yeah, so not massively too much in terms of the daily. What I would really be focused on, look at this 4 hour chart here. The first thing that strikes me here is these cluster of moving averages right around here, and they're sort of coming in quite flat as well, and you can see that it's acting as sort of good support already, because these moving averages work on most of the time frames, especially on the longer ones. Is the 4 hour chart, so it's a decent time frame to look at. What I would be looking for any sort of buying opportunities that a lot of people will be looking at is draw the fib up on there. We can draw the other levels on as well. I normally just stick to the 50%. Let's have a look at the 38.2 and the 23.6 as well. Let's look at the 38.2 first, just to see if we get any sort of confluence around those moving averages. And surprise, surprise, we are pretty much bang on it. We can see where price is kind of reacting at the minute. You can see we're in this kind of choppy sort of zone, but especially on this 4 hour chart, a lot of few candles have been very, very choppy. We've got quite a bit of support under here, and we've also got the 50% Fibonacci retracement as well. So the market is just looking for some direction really. The buyers aren't really convincing at the minute off of this 38.2. So maybe the market wants to come down to the 50% to get a bigger sort of bounce. Remember, in terms of these Fibonacci levels, think of it in terms of like a trampoline, where the higher the market comes down towards a level, the bigger the sort of bounce can be. So if we see it come down to the 23.6 and the 23.6 level, then the buyers are going to be quite attentive. There's not going to be as many buyers in my opinion. That's why you tend to get a better bounce off the 50% and the 61.8 Imagine it's sort of 50% and 618 sort of bigger trampoline levels when you get bigger sort of bounces. So yeah, that's what I would be looking at. I'll leave that fib on there, and see if we do come down, what happens at that 50% and 61.8. That's the recent sort of fib move on that chart, which can be applied. But in terms of the bigger fib and what we've been looking at for the sort of last few weeks now, was this bigger move around here. We're initially looking for a bounce off the 50% round here. We got a little bounce, and then we're looking for a bounce of the 61.8, and that kind of failed as well. But you can see there's a very sort of technical pattern around here. Just highlight this. So around here we've got the bounce of the 61.8, and then you can see previous support, which was around here on this 50%, acted as resistance around here. I'll just quickly show this for you, just in case you can't see it on the chart. I'll highlight these two arrows here. You can see how well previous support and previous sort of levels act. There we go. So you see those two areas there, and that was both the 50%. We originally got the bounce of the 50%, and then it came down, broke below, and then that 50% held. So, great example of how previous support can act as resistance, and that was a really nice technical sort of fib play, really. Although I mean below here, most probably would have been the 78.6, but we did eventually get a bounce up, and you can now see that we're sort of reacting off this 38.2, which kind of coincides with that other fib. I'll just draw it up again. So you see we get a nice sort of confluence zone here between these two sort of fibs, where buyers are coming in, but it's still very choppy, still a tricky market to predict for the rest of the week. So the best thing to do is just keep it simple, keep sort of one or two indicators in there, or just wait for a sort of decent sort of reversal candle to play euro dollar, really. Okay, let's have a look at cable. What do we have on this cable chart? In terms of the daily, we're still getting held at this 200-day moving average. We spoke about it last week and the week before, how to keep an eye on that 200-day. We got a nice sort of bounce off of that 200-day last week. We're kind of stuck in no man's land, really. In terms of the fibs, you can look at this recent fib here, from the lows to the highs. You can see we get a nice bounce of 50% already, and we are looking to kind of take out those highs, I would say. But it's, I mean, the previous day's candle was pretty much a doji. I mean, not a huge amount of action in that candle, sort of the similar size wicks on both, so I would not be surprised. I mean, we are kind of making lower lows now as well, as you can see there, so that's also looking a little bit heavy as well. But yeah, not a lot of interest in these charts in the last couple of charts. Where euro and cable is much more technical, but we have had some very nice technical bounces. So I would not be I wouldn't be too worried that there isn't really any pure setups at the minute. The setups will arise, but you've just got to be patient, really. In terms of last week, in terms of that fib, which was similar to euro that we were talking about, I think it's a bit clear on the daily actually. You can see we've got a nice bounce of the 50% here on this fib from the lows to the highs, so we are technically in a long move, so we'll not be surprised if we do go higher, but it is looking stuck in no man's land at the minute, so not massive any sort of clear indication for me of what to do on cable. I personally think it's more interesting charts around. In terms of dollar Swiss, on the daily chart we're kind of getting supported at this 50%. If we look at it on the 4-hour chart, what do we have? I think we have a nice trendline support going on here on this dollar Swiss chart. You can see that's holding quite nicely there. Let's bring this up a bit. So that's what I'd keep focused on this week, is this trendline support. If that's still holding, there's still some good sort of buying opportunities there. Similar to euro dollar, where we had those cluster moving averages supporting, surprise, complete opposite chart rather than these cluster of moving averages holding at the minute. So looks like the market is trying to test these at the minute and get above them, so keep an eye out if we do get any sort of 4-hour candle closes above these moving averages, because then we could come and take out these previous highs here. But no, it's a nice technical chart, dollar Swiss. Keep an eye on that trend line and keep out for those moving averages. See what happens at these. If we get any close above them, we could fly up, and if we don't, I wouldn't be surprised if we came down and tested back on that trend line. Let's have a look at the Aussie dollar. It's quite a technical chart in terms of the daily chart. You can see we've got supported around here at the 55-day moving average, and then we've broken above this 100-day, and now it's acting as support, but the 200-day moving average is now capping. So in terms of moving averages, it's a very, very technical chart here in Aussie dollar. That's why we keep these moving averages up on our charts, because they do act so technically. In terms of the 4-hour chart, what I would keep an eye on was this fib move, especially last week. You can see how we had this fib move from lows to highs on the 4-hour chart, came down, bam, tested at a 38.2 level, and now we've taken out the highs. And surprise, surprise, now we've broken above these highs. This 0% level, which was the original high from that fib, is now acting as support. So nice bullish chart, this Aussie dollar. You can see this is why we use the fibs, because they do act as such good support and resistance levels, and yeah, that's just playing out really nicely. So I mean, in terms of the week, just all I'd really be focused on is that key support here, that 0% level at 1.0221. Let's have a look at the gold chart. Nothing much has really changed on gold. We were speaking about this on the weekly chart. The key sort of support, which was around 1560s, that's still in play really. Last week's weekly candle was a bit more bullish though. The candle before was bearish, but we said that unless we get a weekly candlestick close below this 1560 level, then we're still in a kind of bullish setup. And this was proven last week with last week's weekly candle, a nice sort of solid bullish candle with the lower wick piercing below that 1560, but the candlestick body closing above, so we're still in a sort of bullish pattern here. But as we also said last week, we were looking for some sort of solid closes above the 55-day moving average. We did have that last week, but it was kind of a fake out and it came below. But now it looks like today's candle wants to come above this and close above, and then what we'll be looking at here is what happens around this 100-day moving average for momentum. And if we get above that, then we'll be looking at 200-day moving average there. So I'm personally still bullish on gold. I think it's a nice play, especially if you're a longer term swing trader. But for me now, it's all about these moving averages. What happens to that 100-day moving average if we test that? Okay, that's done for the charts. Let's have a look at the Forex calendar. Today, what we've already had out at 9:30 AM UK time, we had the construction PMI numbers, much weaker numbers there. Came out at 48.2. The forecast was 53.1. Tomorrow, what do we have? We have some more UK data. We have some Aussie data there, which come out in the morning. But in the sort of London trading session, it's going to. Oh no, sorry, that's today. What am I talking about? Sorry, Wednesday. What do we have? We do have more UK data. 9:30. We have the UK Services PMI, which is forecasted out at 53.0. On Thursday, quite a lot of data out. We have a tentative Spanish 10-year bond auction. At 12 PM, we have the UK Asset Purchase Facility data with the official bank rate. Expected to stay the same, their interest rates. A lot of people are saying, especially after some weak data, that we could get a decrease in the interest rates. That'll be very interesting to see, especially the MPC rate statement. What will Mervyn King and Kobe saying then? At 12:45 PM, with the Eurozone minimum bid rate. Interest rates are expected to decrease from the current 1% to 0.75%. We also have on Thursday at 1:15 PM with the ADP non-farm employment change numbers. So very key numbers there, out there prior to the non-farms, which will be on Friday. We'll talk about that in a second. At 1:30 we have the ECB press conference. They'll be following on from the interest rate decision, and we also have weekly jobless claims, which won't take as much of the focus as the non-farm change, the ADP numbers, and especially not the non-farms out on Friday. Weekly jobless are expected at 385,000. At 3 p.m. of the US non-manufacturing PMI numbers. They're forecast at 53.1, and on Friday we have some Swiss data out in the morning. We have some more UK data, 9:30. PPI input numbers expected at -2.1%. With some Canadian data at 1:30 p.m. But the highlights of the day and the week and the month is at 1:30 with the US non-farm employment change figures, expected of an increase from the previous 69,000 to come out at 92,000. So big piece of data. That'll be very interesting to watch. I mean, in terms of the stock market, we need these numbers well above 100k. 92k is not good enough whatsoever. So even if that does come out 92, I still don't think that'd be a good number for the markets, in my opinion. And we have the unemployment rate comes out at the same time. That's 8.2%. So quite an interesting week in terms of data. It's quite a bit out, especially with a lot of interest rate decisions, which have a big effect on the forex market. And we have non-farms as well. So big week in terms of the data. That's all for today. Hope you have a great week trading. I'll catch you next week. Thank you for listening.